Here at the Global Business Forum, we're obviously talking a huge amount about sustainability. Where is the rubber really meeting the road for you? I mean, what are the numbers that you can share with us around how that manifests through AB InBev?
Oh, great question, because we often say, because it is the case, that sustainability is not just a part of our business, an add-on. It is our business. Sustainability is our business. Reason is very simple. Without water, there's no beer. Without healthy farming and quality farming, there are no raw materials. And without communities that are environmentally sound, I cannot get those materials from.
And has it changed sort of where and how you spend money from a CapEx perspective in terms of going after those sustainability goals that you've set out?
Well, within the four walls of the brewery, there's a lot of technology that has allowed us, for example, in the last 10 years to reduce the consumption of water by 30% per liter of beer produced.
Yeah.
So that's huge. On the field, it's much more about things that has always been part of our business, like seed development that are more resistant to this kind of microclimate combination with soil. But it's more about best practice sharing. Mm-hmm. It's more about being closer to farmers. So it's sometimes in some emerging markets more about training farmers, so they go from subsistence level sometimes to a commercial level, and they get more yield from the same acreage that they manage.
All right, talk to me about the global consumer right now, because it feels like businesses overall, if I had to generalize, are a little bit cautious. We've got a trade war going on, et cetera. And yet the consumer globally, certainly here in the United States, feels very healthy. You are at people's table, you're in the bar, you're in the restaurants. How does the consumer feel to you?
Well, if you look at our half one this year, has been a very good year for us, half one. And if you look at our main countries, U.S., Brazil, Mexico, China, South Africa. In Brazil, consumers have been a little under pressure last 3-4 years, now getting better. South Africa also a little bit under pressure, but that was not different than 2 or 3 years ago. But in general, because we're a global business, we see a good environment for our business. Mm-hmm. You know, it's not without challenges, but that's always the case. So we don't see that what we read sometimes in papers. The other thing is that our production is very much localized.
Right.
So a lot of these things about restrictions, about trade, about flow of goods, that doesn't really necessarily affect us. Always affects a little bit, but 95% of what we produce, we source locally, we brew locally, we sell locally. So it's a bit different.
Right.
So we're brewers, so we're always paying attention to what's happening to our consumer. We're not economists, so I don't have an opinion on some of these trade conversations. But if it's good for our consumers, we're happy.
Right. And what are they drinking right now? What's different? New, we talk about, or you talk about premiumization.
Premiumization,
yeah.
yes.
So what does that actually mean? How does that translate into top line and bottom line?
Well, that's very interesting, because in the old days, you would expect premiumization to be happening in more mature markets, more developed markets. Today, premiumization is a global phenomenon, because middle class is surging everywhere, especially in the emerging markets. And when people, go from this kind of income to this kind of income, they change habits. Yeah. And they start affording things that they couldn't afford before. And that's the whole idea of premiumization. Premiumization is a latecomer to beer. When you think about wine, spirits, cars, technology, so many other things, premiumization has been there forever. In beer is a more recent phenomenon, but because it's recent, has still a long way to go.
Right.
So that's the good news for beer about premiumization. And it's everywhere, emerging markets, more mature markets, everywhere.
And how much are you developing that in-house? How much of that may come from M&A activity?
Well, no, mostly come from organic.
Yeah.
We have an amazing portfolio of global beers. We have Corona, we have Stella Artois, we have Budweiser, our flagship brand. And those brands, they travel well, they complement each other in terms of positioning, and they sell at a premium price.
Right.
And that's pretty much how we built our company. It was always this idea of let's build brands that command a premium so we can have the kind of margins we have, so we can afford and attract the kind of people we have, so we can continue to not only do that, but continue to reinvest in the business organically and also from time to time inorganically.
Let's talk about Asia. You pulled off an IPO there after one false start. You got it out, second biggest IPO outside of Uber, only behind Uber this year. What does that tell you about that market, and what does it tell us about the strategy going forward?
Well, our business in Asia is an amazing business. We're the #1 brewer, especially in the premium segment in Asia overall. In China, We're the number 3 in volume, but number 1 in profitability by a wide margin, and that's because of the premium brands we sell that command a premium and higher margins. So the idea of the IPO has always been to establish and to create a local champion that could be a vehicle for other consolidations and other things we could do in Southeast Asia, mainly. And that's done now. It's in the process. Shares will start trading next Monday, the 30th. And yeah, so very happy to be where we are.
And so is that a playbook that you might use in other places around the world, say in Africa, maybe, the sort of model that you set out in Asia, or is this a different sort of thing?
No, that's very much a mirror of what we have in Latin America.
Right.
We had in Latin America for many years, in which we had a local champion, InBev, that's listed, controlled by us. And InBev was an amazing vehicle to talk and get to deals with local families in different countries and really expand within the region. We think that same magic could happen now in Asia.
Okay. And when you think about, part of the reason to do this deal was to pay down some debt, how far along are you in that process, and what are some other moves you might consider to keep on that track?
Well, the main reason for the IPO was really to create a local champion.
Yep.
Because as we said from day one, we don't need that to get to our target of being net debt to EBITDA below 4 times by the end of next year, 2020. But we felt we needed a local champion there to mirror what we have in Latin America. But of course, the proceeds that we're getting, 5 to 5+ billion, will be used, of course, to pay down debt, as with the proceeds that will come from the Australia sale, around $11 billion.
Got it. One last question for you. When you think about the cannabis market, you and I have been talking about this for a couple years now. Tell me where you are in sort of testing that out. You've got a relationship, I believe, with Tilray.
Tilray, yeah.
How is that going? What do we expect to see next?
Well, to this day, what we have is this. We have a relationship, a joint venture with Tilray in Canada, and for Canada only, because that's where it's legal. At this point, we're only doing R&D. We're not commercializing anything. We haven't made a decision to commercialize anything. So we're only trying to solve some issues in terms of beverages, non-alcohol beverages, infused mainly with CBD that we're studying. But we haven't made a decision yet to go to commercialization. But again, it's only for Canada, where it's legal, where you can do R&D. We're still waiting for the beverages to be legal, so we cannot do anything, not even in Canada.
Right.
But it's not for the rest of the world, not for the U.S., only Canada.
You seeing any impact on the sort of booming cannabis market on beer sales at all? Can you track that?
It's amazing enough to eat. It's too early to call.
Yeah.
We're following that, trying to understand the occasions, consumer needs, and all that. But it's too early to call. We still need more data points and more time to understand all the different interactions.